Welcome back to another episode of the Market Makers of Iowa Real Estate Podcast. In this episode, we talk a lot about, in general, lending, realtors working with lenders, and how they can work together. My name is Darson Grantham. I'm the host of the podcast. I have been an agent since 2020, just putting this podcast together simply because I'm, quite frankly, tired of agents and lenders just talking trash about one another. And I think that working together, one, it's going to create better experiences for agents. And I want to create a community of agents that want to work together, that it's not broker centric. I know broker to broker, inside of Keller Williams, inside of RE/MAX, there are times that the agents try to do those deals because they turn it into, usually can be, a more simple transaction. And I want to kind of create a bigger pond of those agents. Whether you're at Keller, you're at RE/MAX, you're at Century 21, it does not matter in general. I want to find agents that want to work well together and kind of create that community. So that's why we're putting on this podcast. In this episode, we have Matthew Carmody, and Matthew is a lender, a solo lender, and he'll kind of share with us where he's at in the business that he's built and why he's built it the way he is. He is one of the more outspoken lenders that I've been introduced to, and that's why I'm having him on the podcast. He's not shy for words. He will not tell you, he'll not sugarcoat it, which I really, really enjoy. And it's one of the reasons it's one of the type of people I want to have on this podcast, because I don't agree with everything that he says, but he has an opinion. He has a lot of experience behind the opinion, and in general is just a business owner in general. I think that people in the real estate industry, whether you're a realtor or a lender, when you can take pieces from business owners and pull that into your business, you're going to be a better real estate agent, lender, and you're going to build a better business for yourself. Before we get in, when you get done with this, please let me know. Either leave a review or comment on the episode. Let us know how you like it. If you want more tactics, if you want more philosophy, I can bring it all more business. I do not care. Let me know what you like and what you don't like. I would love to hear some feedback. Today we have our guest is Matt Carmody. Matt Carmody.
Yeah.
I was like, McCarmody? No, Matt Carmody. He's a local lender. And so Matt, just give us a 2-minute preview of where you came from and how you became a lender. And then we'll get into just general business about being a lender and working with agents.
So I've been in lending for 10 years. I actually got into it haphazardly. I worked for Fidelity Investments for about 7 years. And when I was getting out of that, they passed a few regulations for Know Your Clients, where you had to spend as much time with somebody that had $500 with you as $500,000. And a lot of what they had for Morningstar profiles and everything made it very difficult to actually manage your clients' money in the way they wanted you to and the way you thought fit.
So financial advising?
Yes. Yep.
Okay.
Yep. Retail financial advising. I did a lot of option strategies for people. When I got out of that, one of our clients owned Red Rock Mortgage at the time. And so he asked me to come work for him. I actually worked there for a couple of years. But everything that I'd done prior kind of funneled into lending. I have a background in accounting. I have a background in construction. I have a background in finance. So a lot of the deals that they had issues with, just people that had stretch IRAs that underwriters didn't understand, certain things that we even had for like code with construction I got through. And so it just kind of fit with everything that I had for a background.
Yeah, cool. So, what is your general, as a lender now, what is your general business model? What would you explain it as?
I deal with a lot of one-off deals, very complicated tax returns. I do a lot of self-employed just because I understand it. I own a couple businesses, so that does help with it. But when I first got into it, I realized from my background in accounting and from what I had read through for guidelines and talking to several underwriters, that there was no translation between tax accounting and underwriting for mortgage. And so that kind of became my niche. And honestly, it's easier for me to get through a self-employed borrower than it is for somebody to get a W-2 borrower through. And a lot of things people just don't understand.
When you say people, like other lenders?
Everyone in general.
Okay.
I haven't been in an institution yet that I haven't had to teach their underwriters several things that I've done at several businesses. Like when I opened the guild offices here, I did their first stretch IRA loan in a company that's in 48 states. So it's just nobody's dealt with it before, and they just kind of say no. And, if you allow people to do that, especially people that aren't in sales, then they will just push it off the side and be like, we can't do that.
Yep.
Well, you can or you won't.
Yeah.
And you won't because you don't understand it. So, just things are more meticulous with that. We have to, guy that has a fencing company that I just did the other week. It's very easy for me to get his loan through, but people couldn't do it before because they don't take the steps for his large deposit sourcing. And this time of year, of course, fencing is going crazy because it's the first time you can do it. Well, what we did was I told him before we even started the loan, I'm like, when we get this done in March, you're going to have to get every single invoice and a copy of every single check from every single job that you do. And that way we can source it and get it through really quickly. But it was also easier for him to get his deposit and for us to source it really easily and get the loan through. And, even paying off some of the debts, just showing where the money came from. It's just about following the cash flow on it. And a lot of people just aren't organized enough to do it.
People as in business owners.
Correct.
So if they're organized, it's easier.
You've got to handhold a lot on it.
Yeah. I'm curious on that business. Do you get paid more for those? Like, do you get to be able to put more points on, or how's that work?
No, you can't legally do that. So a lot of people don't understand that as a retail lender, you are basically cut into your contract where you can't make any more on conventional than you do on FHA. You can't make any more on a self-employed than you do a W-2 employee, anything like that. Now, whether or not the branch makes, and then you take more off of that. I know that a few lenders push a lot of people towards FHA, and it's because the branch gets more, which is ironic when you think about it.
Government money.
Well, it is, and it's because FHA, they have 3.5% down. Well, by the time you get done with an FHA loan, you actually only have 1.75% equity because you put that 3.5 down, but then they tack on what's called their mortgage insurance premium, which is not like your monthly PMI. That's 1.75% as well. So deduct that from 3.5, you really only have 1.75% equity. Well, they take that money and they give it directly to the investors. So that's basically like points up front.
Yep.
And so the investors pay more money for those. So, you could get maybe like 2.5 points off of a conventional deal, and you may get 4 points off of an FHA deal. And so I find you'll probably see something in the future where you see the CFPB crack down on that a little bit.
What's a CFPB? Help me understand.
Oh, Consumer Financial Protection Bureau.
Perfect. Okay.
And honestly, if you have
the overarching lending governor.
Well, it's the self-governing body for basically everything in finance now. So you used to have the National Association of Securities Dealers for like investments and everything. You really didn't have jack for what you had in lending, but CFPB kind of oversees all of that. And then you have FINRA that does a little bit more with securities and everything. But it's honestly a good tool to have. You can put in a complaint with the CFPB, and you can do it all online, and they'll get a hold of you the next day.
Wow.
So if you ever have a client that has a problem with any lender or any securities broker or anything else, they can put in that complaint, and the CFPB will get a hold of them the next day.
That was on my list of questions to ask. Do lenders have something like a NAR, National Association of Realtors, or is it because they aren't like a governing body, but they're dang close?
National Association of Mortgage Brokers.
Okay.
You can choose to be a part of it or not. So it's not, if you're not part of NAR, then, you don't get access to a lot of things.
Very
but
much.
With NAMB, it's not quite the same. But you do have something that you could go into, and, they finance a lot of lobbying, everything else. But, quite frankly, I just play the market I'm given, not the one I want. So I don't really care what they do.
Right. Exactly. I guess we didn't really get into, where do you hang your license, or is it your own company, your own brokerage? How does that work?
So originally, I think that John and I are the only ones left in the Des Moines area. We just brought on Derek too, so we're the only ones in Des Moines area that were with American Pacific. We have a DBA, and it's called Rivers Edge Mortgage. Originally, there was a few people with the company that we were like, we don't necessarily want to have the same name, but it all weeded itself out anyway. So
perfect. So it is your own brokerage or bone company? How's that?
We have our own branch license.
Perfect.
But the overriding company for compliance and everything for back office and underwriting is through American Pacific Mortgage. Yeah.
Gotcha.
Yep.
More general question in the lender industry, or how the lending how the lending industry works right now on a scale of 1 to 10, 1 being like terrible, needs completely overhauled, 10 being like it's perfect, we don't need to change it at all. Where do you stand on it?
I would say we're probably at about a 6 or a 7.
Yeah.
And the problem that you run into is that our credit model is very flawed. So you'll find a lot of people in non-traditional credit just isn't pushed as much as it should be. And quite frankly, people with no debt are better suited to have a mortgage than people with debt. And I don't know. I think it was Q4. The figure for consumer debt was like $1.3 trillion, and even indexed to inflation, it's way higher than what it was in 2007. Yeah. So a lot of people that you're looking at, and there's so VA loans are kind of a nice thing for me to look at as far as what the model should be, but they're the only type of loans that are handled the way that they are. And they're handled from a residual income standpoint. So they basically take your paycheck, see what's taken out in taxes, see what you have for healthcare costs, everything, and then what the money that you have left over determines whether or not you get the loan. You may have a 60% DTI, and you could still get an approved eligible and have it go through underwriting. But in the same respect as somebody might have a 40 DTI, and they're at an incredibly high tax bracket, and they've got all these expenses, and they don't have healthcare through their employer, everything else, and they go through on an FHA loan, and it should have never gone through because they don't have any money at the end of the month. And quite frankly, one of the things that I did when I first got into the business was I started implementing a household budget worksheet for people. And I've actually fired clients because they don't have any money left over. In fact, one of the guys, he went outside for one of our meetings and smoked like 3 different cigarettes. I'm like, well, how much do you spend on cigarettes a month? And, the guy spent like almost $400 on cigarettes. I'm like, that's a lot of smoking.
Right.
But they were $180 behind every single month. And I told them they shouldn't buy this house in Madrid. They actually went and got the loan through somebody else. But who knows? Maybe they have the house, maybe they don't. But I didn't feel comfortable doing it.
Right. Yeah. That's very noble of you. I would say a lot of lenders are just, book it up. If it fits the model and can sell it off, let's do it. Right? Am I right?
Yeah,
would you say a lot?
Part, I would say for the most part, yeah.
I mean, I look at it in the realtor world, right? If an agent told a client, hey, I don't think you can afford this house, they would say, okay, buy. Let me call the next guy who's not going to care.
Yeah.
And we're going to buy it.
Yeah.
Right. But it's what can make you sleep at night.
Yeah. And everything's different for people, especially if you've got self-employed tax, everything else. I take their DTI a little bit more into consideration because everything, again, is based off gross figures. And of course, they have to pay the 7.5% that somebody that has a W-2 doesn't need to pay. The company pays it for them. So there's certain things that I look at, and I try and guide my clients. Now there's some of them that their business is growing, and I'm like, okay, I can see why you're wanting to get this house, and you're going to keep growing. That's fine.
Right.
But there's a lot of people that I think are house poor at the moment, and I don't like that. I bought my house for $230,000. I make 4 times as much as some of the people that get $450,000 houses.
Right.
So now, given I've fixed mine up a lot, but
yeah.
It's a very, you're going to see a lot of problems with that in the very near future.
Yeah. Tell me, how involved are you with other lenders in the area? Like, is there networking? Do you have like your core people, like they're competitors, but not competitors?
There's a couple of my buddies that I talk to, and they're pretty well to do in it, but it's very minimal what we talk about. I probably should be more involved in it, but I'm kind of just nose to the grindstone on what I do.
Yeah.
And of course, I always look at guidelines, and I look at ways that I can get stuff through that I know is going to stay, on the book for a long time. But as far as my involvement with other lenders, it's minimal.
Yeah. So that might sway this next question is, how important is it to be liked by your peers as a lender?
Not important at all.
Zero importance.
No, not important at all. Your goal is to be able to serve your client correctly, and to be able to, and more so even the realtors that you work with, to make sure that they're getting the customer service that they need, because that's who brings me most of them.
That's what, yep.
But as far as people liking you, I mean, there's some of the people that I know, and they're not good at what they do, and they don't like me, and I would think there would be something wrong with me if they did.
Yep. Yes, I get it. How about from a lender perspective, as realtors, is it important for realtors to like other realtors?
I think they put too much emphasis on it.
Okay.
My biggest problem that I have with most realtors and with most attorneys is that they compromise themselves, and the phrase that I hear more often than not is, well, I may have to work with that person again. my goal would be to not work with that person again if they're really bad at what they do and they're compromising your transaction and you're not doing the right thing for your client because you have to work with them again.
Right.
So that I think that, you guys have a little bit more personal selling on that, and that takes some collaboration on both your part because you're more involved in negotiation than what I am.
Right.
I'm pretty hands off with it.
Yeah.
I tell the realtor, this is what we need for closing costs, and here's some things. This is the tax that I put in for this. Please don't go over that. But you guys are more involved in interpersonal communication and the negotiation. But I think that there's too much emphasis on somebody liking you and just getting along for the sake of getting along. That it compromises ethics at some point.
Yeah, that's what I was going to get into. That, like, definitely when it compromises ethics, because we have an agent in our office who, like, she'll very openly say, I will not file an ethics complaint because nothing will get done with it, right? Mm-hmm. Which is a terrible ethics policy anyway, right? And then there's what ethics policy are actually like, is it reasonable? Like we've talked about this, you can't talk poorly about an agent. It's unethical, even if it's truthful.
I've come to fully understand that. And the thing is, it's worse to talk poorly about an agent than an agent doing something poorly.
Say it's worse to talk poorly about an agent. Yes, correct.
Yeah.
It's unfortunate.
It's very unfortunate. And it comes back to the point of, part of the reason why you guys had the whole lawsuit is because people were agreeing to pay other agents that they didn't know for shoddy work.
Yep.
Well, the more you keep incentivizing people to do shoddy work by having no checks and balances on it, then you're really, pardon my French, bastardizing the profession.
Yes.
So I'm a big baseball fan. And if you haven't noticed in the last few years, do you watch baseball at all? Mm-mm. Just look it up, and Facebook and Instagram will show you for the rest of your life if you look up a few things.
I do. I mean, I don't watch games. I see clips. I played athletics, so I kind of pay attention, but
So the biggest issue that they have now is they just want to have automated umpiring. So
okay, yep.
Basically it's just a computer. It tells you whether that was a ball or strike. It tells you if somebody was safe because it knows if their hand hit the bag, everything else. But you have a lot of umps that are missing a lot of calls, and their union is now defending these guys, and several of them, namely Angel Hernandez. I think everybody's heard of him.
Yep.
He's bastardizing the profession. They're keeping him in there, and what it does is now it's bringing more people in. And whether or not somebody's just making a one-off call anymore, now everybody's scrutinizing way more. And what it's doing is it's basically making the profession look bad, and perception is reality for everything.
It is, yes.
And so that's something that's happening right now with realtors. And sadly, because, I know a lot of really good ones. And there's some that, when they walk through a house, they can point out some stuff because they've been through so many that, even some of the things that I don't point out. And I don't know how many homes I've flipped and how many construction companies I've managed. And it's just they went through so many homes because they're showing, the amount of showings they've done is massive.
Yep.
And also, them guiding through a transaction, figuring out ways to maneuver through it, everything. They're great at it. But let's face it, the majority are not that. And, the amount of part-time people that are in it, it really makes the profession look bad, even though the people that are actually professionals in it are worth every single cent they're paid.
You kind of explained it. In your opinion as a lender, and since you flip, you probably deal with lenders on resale and selling and whatnot. What makes a realtor good? What does a realtor that's starting out trying to strive for to be a good realtor?
To be able to pull everybody through the transaction, to be able to figure out what's necessary and not necessary as far as, I think a lot of people, there's a lot of listing agents that I've talked to, and, even some of my buyers, and they'll give me like the inspection report on something, and I'm just like, all of this is so ridiculous. This is not a new construction home. You're buying a home that was built in 1928. And, the listing agent will just lay over dead on it. And you're like, no, you shouldn't be doing that. You should be providing realistic expectations to your sellers and to these buyers, because otherwise the deal's probably going to blow up in both of your faces.
Yep.
So just to be able to provide reasonable expectations to people, because again, you do it every day and they do not. And I don't think that happens a lot in a lot of transactions. And especially one of my flips that I had down in Lakewood in Norwalk. Yep. The agent was newer, which isn't bad. We can help them a little bit. Everybody has their first day. But my listing agent did all of the work for them. And then their broker, when we called up and talked to them, the broker is like screaming at the phone at this lady that's listing for me, very nice woman and very competent as well. But basically, not providing realistic expectations for somebody that's, basically subordinate to her and her line,
right,
and to the buyers in general. So it's systemic. It's not just at any single line. It's not just buyers agents. It's not just listing agents,
right,
it's brokers, everyone. Like when you start giving a license to anybody that can fog a mirror, that's when you really start to make your profession not look like a profession.
Yeah. So is there a fix to that? Get on that. Like how that, you ready, Courtney? Yeah. So the change in the,
I don't think it's on yet.
Okay. I think you're right. There we go.
Yeah.
You're good. So with the change in the buyer agency agreement, do you think that it's going to impact the quality of agents in the business, or is it just gonna, just another check mark thing we have to do as agents and lenders?
You'll eliminate a little bit.
Yeah.
Especially if you have somebody that people know their quality is poor and they're trying to charge 3.75%. You're like, get out of here. Kick rocks. Let's not even entertain this.
That's if the consumer is knowledgeable and understands.
Yeah.
Right.
Yeah. Well,
that's where I get to is like, how much do the consumers actually know, and are they going to interview?
Very few.
Yeah. Cause I mean,
very few, but it also, I think that the buyer's agency agreement, and given it's negotiated by the listing agent too, where it's just like, yeah, you're terrible at what you do. But I think that should be more of the gatekeeper than the buyer signing it, because most of the time they don't know.
Right. Yeah. And we've talked about just internally the temptation that will be to a listing agent to their seller and say, hey, we're going to accept this offer, but I know we said we were going to pay 3% or whatever percent, but we're actually going to pay 3% minus X because I know this agent is terrible and it's going to be a pain in our butts to work with. Right. Can you do that? You don't have to answer that, but just those things are going to happen.
You should do that.
Right.
It's not even that you can. It's if you're a good listing agent, you should do that.
You should do that.
You should absolutely do that. And given it, it sucks for some people that may be worth it. The perception is they're not good, but that's going to be very few and far between. And what's going to happen more is the agents that everybody knows they're not worth it, is they're going to get paid less, and hopefully it'll just weed them out by the time that they pay all their desk fees and they have their overhead and what their split is, and they don't make anything and they figure out you're not worth anything.
Right. Yeah. No, I love, like, performance should be a requirement for me. Like, in my opinion, I've dabbled with the idea, and we talked about this in the last podcast with Jess, is just, should there be a minimum number of transactions? What is it? What is the qualification? And you don't have to, we can debate that. I liked your idea of just a qualifying or something done throughout the career of the agent, because they're very good first-year agents and they're very bad 20-year agents.
Yep.
Right. But if they know everybody at their local, Rotary Club, they'll get all the business, not all the business, but the business in there. It doesn't matter if they're good or bad.
Yeah.
The consumer doesn't ask the question.
Well, you can always stagger it out too, where you have, the first 3 years are annual reviews with that panel, and then every year after that's biennial.
Yeah.
And that would be the way to handle it, is now that you've got through this probationary period and we know that you're pretty good at what you do, now we're just going to check in every once in a while. And, it's not going to be a cavity search on this one. On the biennial, it's going to be more so, are you hitting the bases? Has there been any ethics complaints that we actually are taking seriously now? Yes. Because IAR and NAR aren't doing anything about it. So we're actually going to do something about it.
Yeah. What about on the lender side? Is there what's the qualifier for a good lender, a bad lender? What's that look like?
Honestly, with a lender, it's impossible to know all the guidelines all the time. If you know somebody is creditworthy and they're not going to default, and there's always one off. I to this day, I still haven't had somebody default, but that doesn't mean that I'm doing everything right. Part of that is luck too. But it's more so them not saying no, because there's been so many times that I've got loans through where I just, go in. One of the guys I got a loan through, It would have been last month, and they were telling me, no.
They as in the underwriter.
Underwriter, yep,
Okay.
and company in general. And they were saying, well, you can't use lease payments ever. Well, FHA, that's true. Fannie Mae, that's true. But I went and I looked through Freddie Mac. Well, it was his ex that he'd co-signed a lease with. And as long as there's not an interested party to the transaction, basically somebody that's getting the mortgage, then you can, in fact, exclude that. And so when we got bank statements from her, then she'd paid the last 12 months, and we got to exclude it. So tenacity is really the best thing that you can have in a lender. And Derek, that's coming back over with us, I've taught
What's
him
his last name?
Forsyth.
Okay.
And he's excellent at it. I mean, that's how he does a lot of refugee loans and everything like that. And that's how he gets through it. You know, one of the ones that he's got that we're going to do, it's somebody that they had most of their work history in Africa. We got work letters from Africa, and we got letters from the school from the other borrower.
So when someone is told no from a lender, what I'm hearing you say is it's usually because the mortgage broker, the lender, is not educated enough to ask the right questions to get to underwriting.
Yes and no. If they're told no, if there's no caveat behind that, it's because the lender isn't apt enough or tenacious enough to get the loan done. There's one person that I've told in my entire career that they just need to file for bankruptcy. And they were better off to do that because they did not make enough money to overcome the amount of debt that they have ever. I mean, they were cash flow negative, like doubly.
Yeah.
And so there's always not right now, but we can do this as long as these 3 steps are met. Now, whether or not the client does that is another story.
But not right now.
Yeah.
Yep. Hey, yep. We can get there, do these things, come back.
Yep.
Gotcha. Do you follow? I mean, do you keep tabs on that, or do you just wait for
absolutely.
them?
Yeah.
Part of your deal.
One of my calls today will be with somebody that we've got that was 3 months ago, and we should be able to get them through now. It was just a matter of time because some of the inquiries on the report, and you can go through a credit analyzer. And that's also another thing too, is there's a lot of lenders that kneecap themselves. Like none of the credit unions have credit repair. None of them. So they have Credit Plus, which a lot of companies have, but they don't pay for the credit analyzer, and they don't allow their loan officers to do it. And so if they tell you no, it's because they really can't tell you how to say yes, and or even provide you an amount of time, anything like that. So what we'll do is we'll go through the credit analyzer, and so I'll just go to the bottom and look at the inquiries, and the last 3 inquiries they had on there are almost a year old, and so just hit the X next to it, and magically within a month and a half when they were coming off, then now you can do the loan because we jumped from like a 598 to like a 627.
Jeez.
So you can do an FHA loan on it.
Interesting.
Yeah.
How do you market and brand yourself as it seems like the person, like, if someone says no, come to me, or like, I do tough deals. Like, what do you do to, like?
I don't.
Yeah. You don't market.
I should, but I don't. Which is something that John and I have talked over because I do get.
What's John's last name?
Higdon.
Okay.
And that's my business partner. John's really good at what he does too. John's very tenacious. John's very apt to the job. He's got a very large breadth of knowledge of like guidelines, everything else, and some of the deals he's done. And so Derek and John and I all used to work together at Gershman, and I used to get paid a little bit of money to help them out with all their loans. And so he's went through a lot of deals that are very difficult, and John's actually great at what he does.
Interesting. Yeah. Cool. What do you think you've explained that, but I just want to beat this down as like, what do you do different than every other lender, or like what, and then also in the same vein, what do you do poorly at that you're like, man, I need to get better at this?
Oh, marketing and advertising. I don't do any of it. I'm very bad at it. So I need to get better at that. But as far as
so back to that, what holds you up on the marketing advertising? Like, why do you not, what's the hurdle?
One of the things that I'm very big with our kids is humility. And I think that, when you talk to me, it doesn't come off like that, but I'm very like, I don't know, almost like embarrassed to tout myself for anything. Yep. Like, and go out and be like, I'm great at doing self-employed, or, unless we were sitting here and you're talking to me about it, I'm probably not going to tell you that. It's just that people that have worked with me before, that it's word of mouth. So I'm very bad at that, but I need to get better at it. And also I don't like doing anything. I'm very bad at taking pictures. I'm like very terrible about being in front of a camera. I think one of the marketing guys at a company that I was at prior, he put out one video on my TikTok for me, and that's the only video I've got out there. So I just don't do it. And I'm not comfortable doing it.
Yeah.
I guess I'm more comfortable talking to somebody one-on-one, and given I know there's like some cameras and everything here, but I'm talking to you one-on-one, and I know you, so it's a little bit more comfortable for me. So I'm just not comfortable doing it.
Yeah, because I've seen you comment and make statements on Facebook groups, and they're very good. I've always been impressed, and it's one of the reasons I reached out. Is like you're very thoughtful on the things that you say, and I don't have anything to follow up that besides just like I love you definitely should be sharing people with what you know.
It's again, a lot of the things that I've done have funneled into how I approach lending. Zach Bales.
Oh yeah.
So one of his deals, and I do a decent amount of business with him, and he's a great guy. But one of the deals I got through for him, it was the appraiser had went out, and they had said that this overhead power line, it's an older neighborhood, has overhead power going to the house. And, depending on the overlap that you have on masonite siding, it can be anywhere from 9.5 inches up to almost 12 inches.
Yeah.
And so I'm looking at the report, and they're saying, well, you have to have Mid-American come move this. Well, Mid-American's not going to do it.
The appraiser is saying this?
Yeah, because it's a hazard.
Is it FHA?
Yeah, it's FHA.
Okay.
But one thing that I look at is, I have a background in construction, so I'm looking at it and I'm like, this thing is 3 boards above where the door is. Well, then there's a step-up stoop that you get there as well. Well, I mean, you've done a few homes, and you've done quite a few homes, actually. And so, you've got at least 7.5 inches and probably closer to 8 inches on each one of those. Well, you've got at least 1.5 feet from the step to the step up to the stoop, and then you've got a masonite board below there that's a little bit cut off. Well, you've got another probably 7-8 inches there, and then you've got an 84-inch door, and then it was either 2 or 3 boards above that. And like, this thing is over 9 foot tall, and probably closer to about 10 foot tall. And so I'm calling up the appraiser directly, and I didn't even care what the AMC said about it. Like, I'm calling this guy directly and being like, unless this person that's moving in here is winning dunk competitions, there is zero chance they're going to
hit their head on an electric line.
or touch it for that matter even. And so I had to get, my buddy owns Action Electric, and I called up Joe and I go, I need your help on this one. I need you to go out and write a letter and say that this is not at all a hazard for anyone. And Joe's like, yeah, just by looking at the picture you sent me, that's not a big deal at all. And so we went out and did that, and then we got the AMC to basically back the appraiser down and be like, you're on our blacklist now unless you get this changed. Like, you're absolutely incorrect on this. And it's just stuff like that where you take your prior experience and now you put it into what you do. And that helps a lot. And I'm willing to help, the guys that are with us to do the same thing.
Yeah. Well, I mean, one of the things I debate with and I talk about is your job is, yes, it's to get your clients a good deal, right? And to get them, pre-approved or get them a loan or whatever. But it's really to close the deal, because all parties want this done, right? And it's so common that it feels like in the middle of a transaction, a hurdle comes up and everyone's like, oh, it's just not going to happen. We'll just move on. Yeah. Like, we've all worked really hard to get this done. We're here. Let's find a way. The tenacity. I love that. Like, that is a factor.
Yeah. Well, I mean, if we would have, Mid-American would have told them to kick rocks, and then B, if they would have waited for an electrical firm to come over there and move that thing, it's not high on their priority list, and it's not a revenue maker or anything. So, we could have been waiting 2 months to close that transaction. And then, if we moved it up another foot, then that appraiser that obviously has no frame of reference for anything is probably going to be like, well, it's still not high enough. Well, does it need to be into the roof of the house? And then if somebody's on the roof, will they touch it then? And what's your problem going to be with it then? Versus just refuting the point to begin with and just being like, you're done.
What I love too is you made it a point to let them know, like, the appraisal world, the lack of, repercussions drives me bonkers.
That's the way regulation runs in general, though. You'll go out, and it used to be that a bank used to be able to tell an appraiser, nah, we don't like what you're doing. Now we're going to use a different value, which of course bastardized lending. Yep. Well, now an appraiser is never held accountable for anything. They went to the entire other end of the spectrum, and they're saying, well, everything I do is right. Well, that also bastardizes that profession. And the problem that you run into is that nobody's ever not going to need debt in America. let's face it, that America runs on debt, not Duncan. It runs on debt.
Yes.
And so as far as what we have for data, appraisers may be obsolete. And if they keep doing appraisals the way they have been, where there's no objectivity. I mean, one of the ones that this would have been about a year ago, and it was a new construction home, and I was going to meet my wife up in Minneapolis. So I live in Beaverdale. I'm swinging around through downtown, and we get the appraisal back, and it's like 25 grand short on a new construction. And you're like, nah, that's not going to happen. And it's a spec home too. So I go and I just grab some really quick lunch at Blue Sushi downtown, and I pull out my laptop, and within 15 minutes, I've got different comps. Now, given, we can pick different comps, and that's neither here nor there, but one of the things that you have to have for new construction is they have to have at least one comp from the development if there has been any sold in development. I had 3 comps from the development and one out just outside of the development, like a block outside of the development, all closer in quality, all closer in size, all closer in sale date. So there's some things like that where you're like, you are just lazy. If all I'm doing is pulling up the assessor site and clicking on lots, you did a really bad job.
Yeah.
And there's things like that where you're just like, you're going to get replaced by an automated system that could have done what I just did in a millisecond.
Yep. And you, like, to me, if you're a good appraiser, you want to call those folks out. Like, you want people to call them out. It doesn't bastardize the industry quite so much.
The problem is that there's no real, USPAP is just kind of, it oversees the appraisers, but it doesn't bring any of them together.
No.
And so the appraisers are kind of cave dwellers when it comes to that, where they don't talk to each other at all.
Yeah. Yeah. Which brings me to, we'll wrap this up. Is there anything else? Is there anything else you want to say? Share?
No, not really.
Yeah.
In fact, most of the time people are dragging stuff out of me, and that's why I told you, like, it's just whatever you're going to ask me, that'll give you a thorough answer on it.
I love it. No, it's good. This has been good conversation. And yeah, like, again, the point of this is really to bring agents, lenders together so we work together better, produce better transactions, and just give our clients better service. So appreciate you on. If anyone wants to reach out to you, we're going to give you brand yourself, promote yourself. How do they find you, Matt?
So remloans.com is our website. Anybody can call my cell. They can look it up anywhere. You can look up my name online.
Google me. I would say that.
And I don't put any other number out besides my cell phone. And it's because, again, a lot of the transactions that I have are either very complicated or very contentious. And so I don't want to have them leaving a message for me that I might not get to until the next day, especially with how time sensitive a lot of the deals that I do, that are safe deals are.
Awesome. Well, I appreciate you spending an hour with us, and
Likewise,
thank you very much. And we'll have you on again sometime.
Sounds good, buddy.
Thanks, Matt.
Thanks, man.